Investors and traders, welcome to the channel. Market chart pattern today is 11th of May 2025. Hope everyone is having a really good weekend. We'll take a look at the key banking stocks and ETFs in this video segment. This is something we haven't looked at in a couple of weeks time, so I think it's going to be a really refreshing video. As always, this video is for educational purposes only and it is not a financial advice. So let's start by taking a look at the KRE, which is the regional banking ETF. We are looking at the weekly chart, and here one thing I would like to point out is that right here we have this 78.6% retracement coming in. We had our patterns completing right around here. There was one final push right into it. This is all the enthusiasm coming from the elections, 7th of May, so that just pushed the markets higher right into the 78.6% Fibonacci retracement, and ever since that we have seen the market actually move lower. But in our previous video, we were looking for this 61.8% retracement of this entire leg higher from this low to this high as a possible good support. And we also had a CD leg, which was 1.272 of the AB leg right here. So essentially what I'm trying to say is that we were looking for support to come in, and we have seen for a number of weeks. Look at how many weeks it's been: 1, 2, 3, 4, 5 weeks, more than a month. The market is actually finding good support, and it's just been moving up in consecutive higher or a positive weekly closes, getting into now what I would call a little bit of a resistance level, just because of the 20-week moving average coming nearby. And if we just take a look at this on the really long-term monthly chart, I just want to point out that ever since these COVID lows, what we are seeing is basically higher bottoms, but we have also seen a lower high as well. So it's in this triangle pattern formation, and eventually it will resolve to the either side. And if it resolves to the upside, then that's going to be really good for these banking stocks, which are part of the ETF, or the regional banking ETF. And if it closes to the downside, then what we are looking at is essentially a head and shoulders pattern. So this is going to be the left shoulder, this is going to be the right, this is going to be the head, and this is going to be the right shoulder. And there is pretty good symmetry between this. So one of the things that I like to see in a head and shoulder pattern is the symmetry, because otherwise we could just have many of these variations for head and shoulder. But when there is good symmetry there, that is when it is the most effective in my experience of backtesting these patterns. So we are coming into this right shoulder where there is pretty good symmetry. So this is something which we'll be watching. But if it closes above this trend line right here, which is a descending trend line, then we are looking at an ABCD to the upside. These highs getting challenged and maybe even making new all-time highs, but too early to see at the moment. Just watching what is happening right here. Okay, now let's take a look at the XLF, which is the Spider Select financial fund. Okay, so this is an ETF, and this one is different to the KRE because it also includes stocks such as Visa and MasterCard, and also Berkshire Hathaway. And Visa and MasterCard, they're more of a technology companies, more like fintech. They're not really banks. I don't think they even have a banking license, but they're part of this index. And this is why when, let's say, an investor is looking to take an exposure to financials, for example, through ETFs, they have to be really, really careful in which ETF they want to participate in. Okay, so here what we're looking for was, we had this 49 to 50 level as our target. Didn't reach the exact top of our ABCD, but it came pretty close by, and then we have seen a nice pullback. So I'm not going to go into the details of this pattern because in the previous videos we have discussed the technicals, But here what we were watching for was a potential support to come in because of the 80-90 period moving average, which is on the weekly basis, and also we had an ABCD extended right into it. We have seen a number of weeks where the market is actually closing higher. So this is strong for these stocks, but it's also hitting an area where we have some potential resistance coming in just from the structure getting above these highs here. And if we just take a look at this on the here we go on the daily chart. Let me draw this for you. So we take A, B, and there we go. This is the CD leg. So here we can see, let me actually draw it for you for illustration purposes, that we had a very nice ABCD completion where the CD leg is actually 1.618 times the AB leg, and that also formed a really important low coming in on the 7th of April, just like in many other stocks. And then what we are looking at now is a very nice rally. This rally is actually about right about the 78.6% retracement. This is why I'm saying that we need to be a little bit more careful or vigilant for the financials, because the chances for a pullback are increasing, and if we do get a pullback, here we go, so we could actually see a pullback all the way down to the 38.2% retracement. So in this ballpark figure, where we also have the 20-day moving average as well, so it can actually move down quite a bit, and it could happen quite quickly as well. And the other way is the, of course, this market symmetry. Here we go. So this is the previous decline, and if we just take that, so that also indicates coming into this region as well, which will be pretty good support region in my opinion. Essentially a pretty big trading range, but the first leg ABCD is complete. Now the question is that whether this is all part of a bigger correction. So this entire leg was an A, B, and then this is point C, and D is coming next. Well, the market has actually retraced quite a bit, right to the 78.6% retracement, and if it was a really strong trending market, then between 38.2% and 50% retracements, we would have seen the trend to the downside resume. So having retraced this much, this is actually suggesting that this entire decline was retraced by a lot of amount, and then the chances for a bigger move to the downside are receding. But there is one other possibility, which is this, that we are right at this pattern formation. Let me actually make it of a different color. Let me make it red. Here we go, and there we go, and there we go, and I'm gonna highlight it like this. Here we go, here we go. So we have 78.6% retracement, ABCD. So I think moving back into the range, maybe even coming towards the middle of the range, is higher probability. So I'm not of the opinion that we might see big leg lower, but we are more likely to anticipate a retracement of this entire move to the 78.6% retracement, also because of this pattern formation, where we have a confluence of ABCD plus the 78.6% retracement, and this is highly suggestive. So at least a pullback is coming. Look, on 8th of May, last Thursday, the market just went nowhere. Friday market went just nowhere. So it's just kind of really consolidating. If it begins to close below these lows, this is where highly suggestive the market is actually pulling lower. Okay, now let's take a look at some of the stocks. So let's take a look at Goldman Sachs, and here we go. Just like I showed you on the ETF, it did a perfect ABCD. It's just been rising ever since. We had our target first of 38.2% retracement, and then 50%, and this is where it is. It's getting into this zone where we have also structural resistance and 61.8% retracement. I think the price action is just sideways at the moment, but on the entire XLF, because of that pattern formation, the chances are we could also see a pullback in Goldman Sachs. Otherwise, the chances are also it could hit the 61.8% retracement, structural resistance right here. This is where it could stall for some time. Now let's take a look at JP Morgan. So the JP Morgan stock looks a little stronger than the Goldman. It's already at this structural point C. We're slightly finding some resistance, and this is what we are looking at. The market has just gone nowhere for pretty much the entire for many weeks now, actually, after hitting this. Excuse me, this is daily chart for many days, so about a week. The market has just gone nowhere on the ABCD. So it is suggestive that perhaps we could see some sort of a pullback here as well. Otherwise, if the market is really strong, of course, point C could be blasted to the upside, so it's taken out. That would indicate it is a really strong market. On the weekly chart, here we go. Here we go on the weekly chart. So this is what we see on the weekly chart. ABCD formation right here, really strong move, and now it has recovered quite a lot of this decline. Now let's take a look at let's say Bank of America. Here we go. Similar, we have seen a sharp move to the downside. Now this market for a number of weeks have actually retraced, so that is good. And let's see what this retracement is up till now. Just by eyeballing, I think it's right at the 61.8% retracement right here. This is where it actually closed. So that is quite interesting, because that could also mean at least this market will go sideways, maybe a little bit lower as well. And on the daily chart, here we go. On the daily, we were watching, well, this is how I had highlighted with the ABCD formation, really strong support, and we have seen a very nice move to the upside. And what we are looking at now is this exact 61.8% retracement. But just not only that, if we take this swing as well, I think we are right at the 78.6% retracement. Here we go. Yeah, so we are right in between this resistance point. So I think this market could see a pullback for the Bank of America stock. Okay, now let's take a look at Citigroup, because the Citigroup stock was doing something quite interesting, because it made new all-time highs. You can see that. And we were actually, it wasn't our favorite banking stock, but it made a new all-time high. So I think the changes they are making there in their management, the new management, this might be working, or the investors do seem to like it. It formed also this ABCD structure right here. Nice rally often. Now let's see where we are. And I believe it's retraced right to the 61.8% retracement, just very, very close by. And this is where I think this market could go more in a trading range. If it is really strong, then it's gonna basically take out this point C, and that would indicate a strong market. But right now, I think it's more of consolidation, which is likely to take place here. Okay, now let's take a look at American Express. Here we go. So the American Express, a very, very strong stock. It actually completed these ABCDs all the way, because first we had a target right here. The stock was so strong, it went to the 1.272, and it topped somewhere around the 1.272 to 1.618 extension. And now, of course, it's also like other stocks did, this ABCD decline right into the 7th of April, and now it has rallied right to the 61.8% retracement. So there we go. You know, a lot of these stocks, and including the XLF, they are really key levels where we could see perhaps a turn come into the market, and at least some sort of a retracement to follow. And then let's take a look at this on the daily chart. And here, okay, so this one is a little bit interesting, because it's a different kind of a formation that we normally don't see. So here, let's take, this is the high, and let me bring this, there we go. So this one actually didn't even actually make the one-to-one price projection, which is really interesting. And then I think it's, in my opinion, I think it's one of the stronger stocks in the pack for the banking stocks. It didn't even complete the ABCD and just began to rally, so that's really interesting. Now let's take a look at Mastercard, for example. Here we go. So the Mastercard is really interesting because look how strong it is. It just went into the 7th of April lows and just very close to making new all-time highs. And I think there's a chance it could actually meet up a point D for the Mastercard. And let's take a look at Visa. And Visa is also doing something similar, but it's a little bit different pattern because it already completed our ABCD exact, and then it had a 18% correction, right, this nice ABCD, and now it's also right here. Here we go. And this, I believe, is 78.6% retracement. Strong looking stock though. Here we go. Let's yeah, there we go. This is exactly 78.6% retracement structure, resistance as well. So I think we could see on the daily chart some sort of consolidation to maybe a pullback. And the daily chart, looking at the candles, it is projecting something like that. At least a pullback could happen. There are certain candlestick patterns that I do like to follow, and I'll make a video about those patterns because there's so many of the candlestick patterns, but there are really 3 to 4 which in my opinion, if we use them with Fibonacci, they give us the really good results. And a lot of these candlestick patterns, they do have a meaning in a visual form, but in the context of actually working, a lot of them actually, in my opinion, do not. But there are a few which give really good results. Okay, so now let's take a look at the Berkshire Hathaway. Here we go. So the Berkshire Hathaway, of course, is a really strong stock, making new all-time highs, and yeah, it's just keep on extending its CD leg, and I think there's a chance it could actually go as high as 585. That remains a possibility. So these are the key stocks that we are watching. I think I've missed a few. Let's have a really quick look at the Morgan Stanley. Nice bounce from the ABCD, getting into some resistance level, also coming from the structure and the 20-week moving average, and then the Wells Fargo. Here we go. Also very nice bounce, 7th of April, nice ABCD formation structure, and I believe this is the 61.8% retracement. It's actually above that, getting very close to the 78.6%. Here we go. Yeah, 61. This is where it's kind of hovering around. We could expect some sort of pullback, which could take place. These are the key banking stocks that we are following. So thank you very much for watching the video, and if you happen to like the video, how we do the technical analysis, please do subscribe to the channel, and if you do, hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. And also, if you would like to donate something to the channel, which will just help me with some costs such as the subscriptions, trading view, etc., and it will also help me to bring more educational content for you guys, I will highly appreciate that. The link you will find in the description, so I will really appreciate that. So thank you very much again. Good luck, good trading, and speak to you guys soon.